All right, what's up, YouTube? I forgot to tell you guys something. Before the day ends, I want everybody's attention to be on gold right now. As we see the GDX, we're starting to get those, at that moment of truth right now. GDX has tried $25 for about two times, and we see what happened when they tried $25 this time. $25 this time, and now we're edging back up to that $25 level. Now, what happened last time? We got overbought. There was, they treated it as a security trade, and this is typically what people buy when the market goes down. So gold did have a rally, but now as we see, it became oversold. This is typically when I told everybody, I was thinking about getting in at a gold position, but I really didn't buy. I didn't take advantage of this. So gold proceeded to rally, and now we're back almost at that $25 level. Now, if we can break through 25, we definitely might see a rally here, and we might see 27, and we 27, 27, and we might see 28, which can open the door to $30. Like I said, once we break that $25 handle, that's usually opening room for that $30 handle to be achieved. So when we see gold starting to get overbought, and we see what happened when gold got overbought last time, this is typically when people start to look to sell gold and start to get on the back end of gold and start to short it all the way down. Now, I know a lot of people are still buying gold simply because the market is going down. Now, the market is only going down because of this geopolitical risk. Once the market starts back focusing on earnings and future growth, this is typically when the market can actually get some bullish sentiment, and the market can go back up. As we see, the Dow Jones is now in that trading range, and now we're at the bottom of the trading range. I plotted this out a couple days ago. I wanted to show you guys exactly how the Dow Jones trades. So typically, each year the Dow Jones barely moves, and this year was kind of different simply because once Trump was elected, the market started to rally on optimism, and a lot of people were really hyped. So that's why we see a huge move to the upside right now, and a lot of things are starting to look a little sketchy simply because earnings season is approaching us next week, and we want to see if those moves were justified with the market going up. So the market moves on future expectations. So border tax was one, healthcare was one, and whatever Trump talks about, that's typically what the market wants to price in, and that's typically why you see oil stocks rally, infrastructure stocks rally, and whatever stocks dealing with Trump. This is why they rallied, and you probably might see freight stocks rally as well, and that's dealing with the Trump trade as well. So like I said, the market is going to adjust towards the president. So if Hillary Clinton was elected, we would move to the stocks that are the sectors that she represents. But Trump is more of a coal, steel, and things like that. So that's typically what you see in rally, once he became elected as president. I know you've seen the sell off once Trump was elected, but that was typically a repricing for the president for, stocks to go ahead and get the okay. So, you start to see steel rally and things like that. And one trade that definitely stuck out was technology, but technology is definitely a beast now. But when Trump was elected, all the Silicon Valley stocks completely sold off. A lot of people were dumping because Silicon Valley really didn't like Trump, but that's besides the point. I'm kind of getting besides the point here. But the Dow Jones is definitely trading in this range right here, and we might find support, or we might see a bounce. But right now, the market is just about oversold. There's a lot of overselling going on in the market, typically because of fear. So if we do break out of this range, I'm not sure where we can go, simply because the market or the Dow Jones is now at 20,000. 20,000. So typically small moves for 20,000 are probably 300. And when we got to 200, that typically wasn't a really huge sell off, typically because there wasn't a lot of volume going on. And that's typically the problem for the past 2 months, that there wasn't really enough volume going on, and there's still not enough buyers coming in or sellers. A lot of people are still sitting on the sidelines waiting for something to happen. But that's something to think about. So all the gold stocks. So check this one out. JUNG. That is a gold miners bull. We have UGLD. This is a bull as well for gold. As we see a breakout happening for this stock. That's pretty interesting for that one. Um, JDST, and let me see if I can find a gold short here. You can just Google gold short ETFs and it'll pop up. There will be a lot of things pop up, but we want to focus on, the leverage gold short. So typically what I mean by leverage is bull three times shares. So this is typically, three times the price action for the shares. So that's a short towards that. And we have DGLD. So as we see, we're oversold here at $45. And this, this could be your trade right here. 45, we bounce back at 50. And we might see where it goes from there. But this is definitely one way to, buy or sell gold on, for protection. Or, if you want to participate in the rally, this is definitely one way to participate, simply because people are only buying gold simply for protection. And once the market starts to rally, we will see a lot of sellers step in and start to sell gold. So this is where gold is right now. We saw a breakout right up in here, this 1262 level. And as we can see right here, this candlestick right here, we're focused on this bar right here. The candlestick for this bar became resistance in this trade. So when it came back up, we seen strong resistance. And, once we tried those levels, we stayed there for a little bit. And like I said, once resistance is broken, we tend to see large bars, and that's typically what's happening. And 1300 will be a true test for the market, simply because we have to fill this gap all the way up to 1339, or we can fill the gap from 1307. So 1300 is definitely a hard step for gold, and we are overbought for gold as well. So if you follow, like those technical indicators, like I always point out, we want to pay attention to those, because once gold becomes oversold, it's usually due for a bounce. For a check down in price. So like I said, you might want to get behind these short gold names, typically because that's usually where the money is about to go, and the market might be due for a bounce or a hard bounce. So we might see support come back around 1250, and if the market gets back bullish again, we might see 1200 again for gold prices. So like I said, people only got in for gold for protection. If the market starts to rally again, people will come off that gold trade, and they will start to buy more stocks, which is definitely going to open more room for FAS. Like I said, people are definitely looking for growth names, and this is typically, when it happens around from April, well, just about all year, but for me, April to August is definitely a time where I can definitely focus on some leverage ETFs, because typically that's when school year is almost over, or the school year is just about to begin. So I definitely want to get some good trading in, just before school year ends, and just before the school year begins. So that's what I wanted to point you guys' attention out to. So if you wanted to trade or short gold, that's definitely one way to do it. Or you can look up gold short ETFs, and that'll also get the job done. So take care, guys.